Dear friends, warmer temperatures have finally arrived in Canada. With the temperatures rising, the property prices have luckily cooled down. Nature seems to be playing the balancing act. Nature and land, property, seems to be working in sync.
So, friends, today I'll cover a couple of topics on real estate. I'll cover cycles in real estate. I'll talk about foreign investor strategies. I'll talk about what are the kind of properties that must be avoided in the current market. Then I'll talk about strategies for traditional investment. And most importantly, there is a strategy that I have introduced. I have called it as the streetwise investment strategy. In this strategy, I'll talk about how, as an investor or as a first time home buyer, you can easily save up to 300,000 in a detached home, and I will prove it by examples. So if you look at this slide, there are two distinct cycles in home prices overall in Canada. The first cycle is called a sustainable cycle or economical cycle or practical cycle or a long-term cycle. And the other one is a yearly or an annual or a seasonal cycle. So first I'll talk about the sustainable cycle. So from the period of 2008 and 2009 to 2019, 2020, 2021, there is no specific start date of these cycles, but around that period, if you look at this graph, so the market moved between balanced seller's market and another again balanced market and a buyer's market and a seller's market. So, and the prices also changed accordingly. The important point here is to understand the graph. The graph doesn't move to establish the same low. The graph moves always to establish a new low. And this new low is never lower than the earlier low. It is lower than the peak. It is slightly lower than the peak. So if the average price of a detached home in Kitchener-Waterloo was around 350K, it is never going to come down to those levels in 2022. In 2021, 2022, the price of a detached home was reaching close to 1.5 million, 1.6 million, 1.4 million. It was hovering in that range. With the current correction, the new low will be around 1.1 million. And this low will remain for a few months, maybe a year or so. So today's housing market is a lot similar to the mid 2017 property market in Ontario, Canada. The prices in the beginning of 2017 had increased phenomenally. They were higher by 30 to 40% from the previous year, and the government had to take certain measures to cool it down, and it did drop by 15 to 16%. One of the key measures taken by the government in 2017 was the introduction of non-resident speculation tax, also called as NRST tax of 15%. That same tax has now been increased to 20%, and it has been now spread across the overall province of Ontario. Now, anybody who understands foreign investment will look at it as a very lucrative time for foreign investors. It has been spread across Ontario, which in itself is proof of the fact that there is a lot of foreign investors interested in investing in Ontario. Now, NRST is a little complex topic, so I can speak in specific detail how this is the best time for foreign investors to invest in Ontario, and anyone who is interested can reach out. Now, coming to the second cycle, which is also called as the yearly cycle or the annual cycle or the seasonal cycle, is largely irrelevant now in Canada. There are multiple reasons why it is irrelevant. The most important being the influx of people from all over the world has changed the demographics, and so though factors like people preparing their homes in winter and those kind of things have become irrelevant. So the seasonal cycle is no longer a lot relevant, and it doesn't really impact the property prices so much.
So now, having explained the cycles in real estate prices, the important factor is how should an investor or a buyer decide in the current market. So anybody who wants to buy for flipping in the current market or a pre-construction property, it will be a bad decision. This is not the time to think about flipping or buying a pre-construction property. This is the best time to buy a traditional property as the market has corrected, as well as for the home, for the first time home buyer or a person who wants to live in that property. This is again the best time to buy. The choices have increased, the prices have come down, the mortgage rates have slightly gone up, but they will go a lot more. So this is a good time for buying a traditional property. So now let's talk about saving some money in buying homes. Let's look at the streetwise investment strategy. So what I have done is I have looked at the data of sales, active, pending, closed, all kind of streetwise houses listings in the last 6 months for a specific kind of property, which is 3 bedroom plus 2 bathrooms plus, and a property which is not less than 30 years. It could be 0 to 5 years, it could be 5 to 10 years, but less than 30 years. So, and I have looked at all the different regions. I've looked at East, Waterloo East, Kitchener East, Waterloo West, Kitchener West. I've looked at Woolwich, I've looked at Paris, I've looked at Niagara, I've looked at various regions. And so let me explain what I'm talking about. So if you look here, so there is this street called Paston Trail. This is in Waterloo West. Now, if you see, there are a lot of houses that have been sold on this street. And if you see this house here, which is 272 Paston Trail, this got closed for 1.2 million. And a similar house, which is 328 Paston Trail, has got sold for 975K. Now, this is exactly similar house, and so if you see, there is a clear savings here for the buyer of about 250K. So earlier when we were looking at homes, we used to go and look at homes and then decide on the CMA. So in the current market, as a realtor, I can show you where you can save up to 300,000. So another example would be like if I come down here, so let's look at, there are various examples, right? So if I look at, this example here, in the Grey Silo Road, there's another opportunity of 300K on a townhouse. Let me look at, so I've looked at different areas. So if I go to Kitchener East, there's this Upper Mercer Street. Now on this street, again, there are a lot of houses that have been sold, about 7 plus. And there are a few, in fact, about 12 plus. And there are current active listings where there's an opportunity to save up to 150K. So, so the important thing here is that you can now look for houses on certain streets where there has been a good amount of activity, where there is a lot of comparable available. And if you are buying a house
on a particular street which is 300 to 200,000 lower than the average prices in that street in the last few months, then obviously you are making a good deal. So that is the kind of strategy, that is the kind of approach that can be taken in today's market. And once you take this kind of approach, you will be, as a buyer, as a first time home buyer, or as an investor, you will be totally protected from the downside, further downside in the market.
I hope you all enjoyed watching the video and got some meaningful insights into investing in real estate in Canada, especially in the Kitchener-Waterloo-Cambridge area. If you're looking to save some good amount of money in the buying process, you can reach me out on 519-722-7725. Thank you all.